What's going on, everyone? Let's talk about Rule 15C2-11. It's also considered CFR, the Code of Federal Regulation, Parts 230 and 240. This is related to the Sears and the Blockbuster situation that was going on last week. So let's go ahead and dive in here. I'm going to be covering this a little bit at a time because it is like a 200 and something page document, so bear with me. So let's go ahead and take a look at the overview. So the Commission is adopting amendments to Rule 15C2-11, which sets out certain requirements for a broker-dealer seeking to initiate or resume quotations for securities in the OTC market or the over-the-counter market. And then Supernote 1 here, it's a doozy, says, for purposes of this release, Rule 15C2-11 as amended is referred to as the amended rule. A quotation is defined as any bid or offer at a specified price with respect to a security or any indication of interest by a broker-dealer in receiving bids or offers from others for a security, or in any indication by a broker-dealer that wishes to advertise its general interest in buying or selling a particular security. A quotation medium is defined as any interdealer quotation system or any publication or electronic communications network or other device that is used by broker-dealers to make known to others their interest in transactions in any security, including offers to buy or sell at a stated price or otherwise, or invitations of offers to buy or sell. An interdealer quotation system is defined as any system of general circulation to brokers or dealers that regularly disseminates quotations of identified broker-dealers. A national securities exchange is an exchange as defined under Section 3A1 of the Exchange Act and Rule 3B-16 thereunder, that is, registered with the Commission under Section 5 and 6 of the Act. To continue this paragraph here, the amendments are designed to modernize the rule and to enhance investor protection by requiring that current and publicly available issuer information be accessible to investors. Specifically, the amendments provide greater transparency to the investing public by requiring information about the issuer and its security to be current and publicly available before a broker-dealer can begin quoting that security. Overview continued. Securities that trade in the OTC market are primarily owned by retail investors. Many issuers of quoted OTC securities publicly disclose current info about themselves. However, in other cases, there is no or limited current public info available about certain issuers of quoted OTC securities to allow investors or other market participants to make informed decisions. A lack of current and public information about these companies disadvantages retail investors because it may prevent them from estimating return probabilities and generating positive returns in OTC stocks. It can contribute to incidents of fraud and manipulation by preventing retail investors from being able to counteract misinformation. A majority of the Commission enforcement cases involving allegations of fraud behavior in the OTC securities market has involved delinquent filings, which result in lack of current, accurate, or adequate info about an issuer. And the Supernote 7 says, for instance, one study looked at a broad sample of litigated securities cases between January 2005 and June 2011 and identified 1,880 cases involving OTC securities and 1,157 cases involving securities listed on national securities exchanges in the United States. Of the OTC securities cases, the majority, 1,148 cases or 61%, were related to delinquent filings. 151 or 8% were related to a pump and dump scheme. 159 or 8% were related to financial fraud. 12 or 1% were related to insider trading, and 212 or 11% were related to other fraudulent misrepresentation or disclosure. The difference between actual cases and litigated cases depend on rule setting, listed standards and exchange trading rules, surveillance, the people and technology available to detect fraud, and the quality of enforcement, the process and expenditures to enable cases to go forward, and the effectiveness of courts. As broker-dealers play an integral role in facilitating investor access to OTC securities, continuing on right here, and serve an important gatekeeper function, Rule 15C2-11 is designed to prevent fraud and manipulation by requiring that broker-dealers review key basic information about an issuer before initiating a quoted market in an OTC security. In practice, however, certain of the rule's outdated exceptions often have resulted in a quoted market for the securities of issuers which there is no current and publicly available information for analysis by market participants, including broker-dealers and retail investors. Sears, Blockbuster, Anyways, in some cases, a quoted market may continue for the securities of issuers that no longer exist or have ceased operations. Blockbuster. Providing greater transparency of OTC issuers to retail investors so that they can make better informed investment decisions and counteract misinformation promotes the Commission's important mission of protecting investors. Yeah. The amended rule continues to require a broker-dealer to obtain and review basic info about an issuer of an OTC security before initiating or resuming a quoted market in the issuer's security. The amended rule also continues to require the broker-dealer to have a reasonable basis for believing that the information about the issuer, when considered along with any supplemental info, is accurate and from a reliable source. In addition to broker-dealers, under the amended rule, qualified interdealer quotation systems, each a qualified IDQS, which according to Supernote 14 wants you to refer to Infra Part 2, J.4 for a discussion of the proposed definition of the term qualified interdealer quotation system and how that term is defined in the amended rule. So that's going to be a wild goose chase. But basically, they are permitted to comply with the information review requirement, and broker-dealers may rely upon a qualified IDQS publicly available determination that it has complied with the information review requirement to publish or submit a quotation or initiate or resume a quoted market in an issuer's security. So continuing on, the amended rule also adds 3 new exceptions. First, the amended rule adds an exception for highly liquid securities of well-capitalized issuers if the security meets a multi-pronged test involving the security's worldwide average daily trading volume, value, and its issuer's total assets and shareholders' equity. Second, the amended rule adds an underwritten offerings exception for quotations for a security by a broker-dealer that is named as an underwriter in the registration statement or offering statement for such security. Finally, the amended rule adds an exception to permit broker-dealers to rely on publicly available determinations by a qualified IDQS or registered National Securities Association that the requirements of certain other exceptions are met. And Supernote 18 says these exceptions are the exchange-traded security exception, the municipal security exception, the piggyback exception, and the exception for the highly liquid securities of well-capitalized issuers. The qualified IDQS, or Registered National Securities Association, must establish, maintain, and enforce reasonably designed written policies and procedures with respect to making the determinations. The exception also now requires issuer information to be, depending on the regulatory status of the issuer, one of the following. 1. Current and publicly available, as defined by the amended rule, timely filed. Number 3, filed within 180 calendar days from a specified period. The exception also now includes a grace period that permits broker-dealers to continue quoting the securities for a limited period of up to 15 calendar days once a qualified IDQS, or Registered National Securities Association, makes a publicly available determination that an issuer information is no longer current and publicly available, timely filed, or filed within 180 calendar days from the applicable specified time frame. So even if it doesn't apply to the rules, they're still going to grant these people a 15-day grace period to get their shit together. So the SEC is terrible. The piggyback exception no longer requires that there be quotations on each of at least 12 days within the previous 30 calendar days to establish piggyback eligibility. Perfect. Overview continued. In addition, the amended rule modifies the piggyback exception, which allows broker-dealer to rely on the quotations of another broker-dealer that initially complied with the information review requirement. The amended rule permits broker-dealers to rely on the piggyback exception based on at least one-way price quotation, so long as there are no more than 4 business days in succession without a quotation. And then Supernote 20 reads, the piggyback exception under the amended rule no longer includes provisions contained in the piggyback exception under the former rule. For, number 1, a broker-dealer quotation in an IDQS that does not identify the quotation as an unsolicited quotation, which provision permitted broker-dealers to publish or submit quotations in reliance on the piggyback exception in an IDQS that did not make known to others unsolicited quotations. And number 2, self-piggybacking by market makers, which provision permitted broker-dealers to publish or submit quotations in reliance on their own quotations if all other requirements of the piggyback exception were met. So those 2 things will no longer be applicable, so that is good. So basically, the amended rule also prohibits reliance on the exception if the issuer of the security is a shell company after a certain prescribed period, or was the subject of a trading suspension order issued by the Commission until 60 calendar days after the expiration of such order. Very good. That's actually good news. So this is a very large filing. I'm not going to bore you and read 300 and some pages of documentation in one sitting. I am going to break this apart in segments. That was the overview. I was going to give you some interesting notes to chew on in closing before I move on to the next part here. So the effective date of this rule is September 26th, 2021, which is coming up. So it's likely what we could be seeing going on in the OTC markets is their last hurrah, because technically they're about to fall into that, grace period that they were talking about. So keep that in mind. And regarding the bankruptcy situation in general, I did find an excerpt way further down the filing. It says examples of red flags, and then it says significant events involving an issuer or its predecessor or any of its majorly owned subsidiaries. The following types of significant events raise red flags: change in control of the issuer, substantial increase in equity securities, merger, acquisition, or business combination, acquisition or disposition of significant assets, bankruptcy proceedings, or delisting from any securities exchange. These are all examples of significant events involving the issuer, though they are not per se examples that reflect fraud and manipulation. However, certain events, a change in control of the issuer, merger, acquisition, or business combination, or acquisition or disposition of significant assets, can provide unscrupulous issuers an opportunity to artificially overvalue the issuer's assets to support an upward manipulation of the issuer's stock. An increase in the number of an issuer's equity securities provides the securities necessary for such manipulation. Bankruptcy proceedings or delisting from an exchange may also indicate facts surrounding an issuer that could lead a broker-dealer or qualified IDQS to conclude that it does not have a reasonable basis to believe that the issuer's financial information is accurate. And then right here, Supernote 262, coral capital letter here says it's encouraging the Commission to amend the rule so that broker-dealers cannot rely on the piggyback exception to publish quotations for securities of issuers that undergo material business developments, including, but not limited to, declarations of bankruptcy, reorganizations, and mergers, unless information regarding such development has been disclosed. So there you have it. It's kind of up in the air at this point. We'll kind of have to wait and see. I need to finish reading the filing, but the Commission says that they're making this rule amendment to protect investors and prevent fraud and manipulation in the OTC market, which we do get hints of in some of the language, but again, it is the SEC. It is a shitty, broken market, and we are talking about the darkest, shittiest market of them all, the OTC market. So bear with me on this one. I'll get this one out as I work on it, and that's basically it for the overview. So that's basically what this is, and we'll go into further detail later on.